Hello, today we are going deep drilling into a SPAC that has exploded up 50% since IPO in October, and look at why you cannot afford to miss this tremendous opportunity.
And we do have real news this morning. In fact, one of the largest transactions that we've seen to date in the latest, let's call it SPAC frenzy. This morning it's Foley Trasimene. That is a $1.5 billion SPAC, and there you can see it's doing quite well after the announcement of a deal this morning to buy a business. Well, actually roll it really, because Blackstone and CVC are the owners of this business. It is called Paysafe.
Foley Trasimene Acquisition Corp 2 will be morphing into PSFE after a merger set for the first quarter of 2021 with Paysafe. I reckon it will be going through the roof very soon, and time is running out to get in on the cheap to maximize your returns. Stick around, I think this is one stock you cannot afford to be in the dark on. Keep it simple. For those of you new to the channel, I am the Simple Trader, and I aim to keep it very simple here. I am not a financial advisor, so please understand this is for entertainment only. No more plugging. Let's start drilling. This deep drill will be split into two parts because there is so much to cover, and like me, you probably need a timeout to digest some of this. Yeah.
Money never sleeps, pal.
Without further ado, here's the rundown. Part A, BFT SPAC explained. BFT Background, Paysafe and the potential upside opportunity. Part B, PSFE merger specifics. BFT and PSFE risks involved. Price prediction, and is it a buy right now? Simply put, a SPAC is a special purpose acquisition company, which is essentially a blank check or a shell company. These are set up for one purpose and one purpose only, and that is to acquire a target company in order to perform a merger that would provide the acquired company with an accelerated route to a public listing. Some huge companies which have taken such routes with SPACs include DraftKings with Diamond Eagle, Virgin Galactic with Social Capital, and the coming open door merger with Social Capital 2, IPOB, which by the way guys, is looking big. So, how do we as investors get involved in a SPAC? SPACs that have IPO'd means they can be purchased on the open market just like all other stocks. In the case of Foley Trasimene Acquisition Corp 2, which from here on I will refer simply as BFT. There are three vehicles that we can look to buy in, and they are BFTU, BFT and BFTWS. Let's go a little deeper. Simply put, BFT represents shares in the SPAC itself. BFTU on the other hand represents one unit comprising of one share and one-third of a warrant. And finally, BFTWS represents one warrant. You may be wondering, what are warrants? I'm not going to give you a crash course here because it requires some time to explain fully all the details, pros and cons, and understand them fully. But here is a simple overview of the BFT warrants on offer. In the case of BFT, one warrant will be exercisable at a redemption price of $11.50 per share and 30 days from the date of the merger, or once the price of the merged shares exceed what is called a trigger price, and in BFT this is set at $18. Sounds simple enough? The main benefits of warrants are they give you an increased leverage for less risk from the outset. This is because warrants are much cheaper, but do come with higher reward if the stock post-merger goes up big. Think of it as buying an option to purchase a stock at a set price in the future, but don't get it mixed up with options, as the warrants are directly converted by the company itself. The big downside risk in warrants for me is if for some reason the merger does not go through, then your warrants could essentially become worthless and you stand to lose every penny you put in, plus the time that you lost in waiting for this outcome to materialize. Whereas for common stock of BFT, in a situation like this, you would essentially be refunded $10 plus a little interest and would stand to lose only the difference you bought the stock at. So, there is an incentive if you feel good about the SPAC to jump in early as close to the $10 IPO price as possible. The risk to this is, of course, a SPAC has generally 2 years to complete a merger, so your money could be locked up for some time and not moving. This is a risk we need to weigh up as investors. For example, if you have seen my previous video, you will know I have taken this risk and have taken a position on Pershing Square Tontine Holdings, who have not yet announced a merger. A further deep drilling video will be coming soon, so stay tuned if you're interested to know more about PSTH. Now, one of the most important questions we have is what happens on merger day. Remember, the merger day is not yet finalized, but only remarked as being in the first quarter of 2021, which is not that far off. Well, as per the Form 8K, for every 1 share of BFT, you will receive, when the merger is completed, 1 share of the new company to be trading under the new ticker PSFE. This is important, and note that not all SPACs carry this 1-to-1 ratio, so it is a must-do to check out the SEC filed forms before investing in any SPACs. Foley Trasimene Acquisition Corp 2. Yes, 2. And you need to know there is a Corp 1 that trades under ticker symbol WPF, which is a totally different SPAC, and to date has not announced their merger yet. So it's an easy mistake to make and buy in on the wrong stock, so be sure you are trading the right ticker. Now, BFT is a SPAC that IPO'd at a value of $1.3 billion on the 9th of October this year. It is led by billionaire William P. Bill Foley. He is simply a world-renowned investor and entrepreneur. He is most famous for heading up Fidelity National Financial and Black Knight Financial Services. Foley is also the lead investor in Black Knight Sports and Entertainment, the consortium that was awarded an expansion ice hockey franchise named the Vegas Golden Knights that joined the National Hockey League in 2017. Foley has an impressive resume and a diversified business that includes winning investments in wineries, golf courses, hotels, resorts, restaurants, and auto part manufacturers. Just to highlight, in 2003, Bill Foley led FNF on the acquisition of Alltel Information Services for $1 billion, which later became Fidelity National Information Services. Don't need to say much more apart from the fact that today it has a market cap of $91 billion.
But this is Bill Foley, and Jim, you know well, this guy has an incredible track record of creating value. Former CEO, now chairman of Fidelity National Financial, both the largest title insurance company. Remember, took Dun & Bradstreet private and public. Kenai, his holding company, has done very well. They came up most recently in the CoreLogic thing, which I've been following.
The core strategies of BFT are noted on their website, and it is to 1. Acquire a target company, which in this case is already confirmed to be Paysafe. 2. Complement experience by insertion of BFT founders. And 3. Leverage strengths moving forward. I am seriously bullish on BFT to bring extreme value and growth opportunities in Paysafe moving forwards, based on their past performance. Paysafe are a UK-based fintech company founded in 1996, specializing in online payments and digital wallets and transactions. They currently own quite a few subsidiary brands such as Skrill, NetTeller, Paysafe Cash and Paysafe Card. Paysafe has 3 main streams of business. They are the second largest global stored value digital wallet service, which allows for online, mobile and in-app peer-to-peer money transfers. They are heavily positioned in the online gambling industries worldwide and have amassed big hitters such as DraftKings, William Hill and Betfair, who are all using their platform. But what's more immense is the fact that they have footholds in 120 plus markets worldwide, which is just incredible. Consider this. Gambling is an industry that has been around since forever, and it's not going away anytime soon. All I do see is the continued legalization of online gambling.
Yeah, so
fantastic for gamblers. Remember, gambling is legal.
Right.
Again, it's legal in many states.
Digital wallet consolidation.
That's so smart.
And again, they're talking about, obviously, margin improvement under Foley.
The COVID pandemic has also clearly shifted the gambling focus to a more online digital approach, and for me, this represents huge future growth potential for gambling-related online transactions. So, this could be huge for a business like Paysafe, who are Already positioned well in these markets. There They are also the fourth largest independent merchant acquirer in the US, which is basically the platform that online e-commerce utilize. This market has grown exponentially over the last year as people have switched their shopping to online due to the pandemic worldwide. Finally, for me, what sets them apart right now from the competition is they are the #1 company in terms of iGaming eCash network.
You can't be serious, man. You cannot be serious!
And this is the space to watch in the coming years for mega growth. Look at the companies they are now working with: Twitch, Fortnite, Spotify. These companies are huge and have literally millions of users, which means millions of potential transactions. In the investor presentation, we can see they provided a projected compounded annual growth rate of 55% in the US, 15% in Canada, and 12% in Europe and the rest of the world. This tells me the future potential is incredible and the upside is tremendous if Paysafe continues to gain positive market share. The business model of Paysafe is showing us incredible diversity, as they currently reap 51% of business from processing, 30% from wallets and 19% from eCash. That's not even by geography, where they are showing their diversification even more, with 48% of business from North America, 38% from Europe and 14% from the rest of the world. I believe Paysafe will benefit enormously with the merger with BFT due to Foley's history of turning non-profitable companies around.
Apparently
he's
great
fantastic.
vineyard,
The Dun & Brad's
owns a hockey
incredible.
team.
The Dun & Brad was incredible. It was
Yeah,
a
Dun &
losing
Bradstreet.
company. It turned into a winning company, made a lot of money in no time.
It was quick, you're right.
Yeah.
And we can see Paysafe is already aggressively planning cost savings, which will only push the company forwards and upwards. Please stick around for part B, where I'll wrap up this deep drill into BFT and look at PSFE merger specifics, BFT and PSFE risks involved, price prediction, and most importantly, is it a buy right now? See you shortly.